Welcome to Markets Now. I'm Michelle Rook with Craig Turner of StoneX, and we did see lower livestock futures. The grains were mixed with corn and wheat higher, soybeans lower. Okay, Craig, let's talk a little bit about corn and wheat. Was that just a bit of a technical bounce here end of month?
Yeah, it looks like it was. The corn market came down way too much on Tuesday the 29th, which would be the day before first notice day. There's a lot of longs that had to exit, and then once that happened, that selling pressure went away, and we were able to come back up. Opposite for wheat, right? The market has been very short wheat here. We're coming into first notice day. We were getting to points on the chart where you're just asking yourself, how much lower are we going to go here, or how much longer will anyone want to ride it? Also, who wants to keep on selling wheat for a new position or adding on at these levels too? So I think we saw basically kind of a month end value area type deal with wheat, and we saw that pop.
And as far as the corn market, we were down at a value area because we saw flash sales the last couple of days, and ethanol production numbers were good, right?
Yeah, absolutely. We are, and not only just value in terms of where we've been recently on the chart, but also in terms of carry out, right? So with new crop under 1.5 billion, when you do get down to these prices in the mid fours, they corn does look like a bargain. When you take a look at just how the stock to usage for the old crop market is. So not surprised we saw some buying coming in. If you need it, you might as well do it now. Though the one thing I would say is, the anyone who is buying corn knows that in about 3 to 4 months there will be new crop available. So if anyone can wait, great. If not, we saw people come in and buy.
Right. So the market also initially this week got weighed on by this fast planting progress. And so do you think that the market is trading higher acres, or do we have that kind of factored in here? Because I've been hearing some talk of even above 96 million corn acres.
That would be something else because if we think back to what 2012, 2013, I don't think we got much over 96 back then, and corn was $8, right? Go rallying into the past the fall there, and here we are at mid fours. So maybe you get an increased corn acreage. With also too, with corn coming down here and soybeans a little bit better than it was when you take a look at chart of just a couple of months ago. Um, there's not as big of an incentive to plant corn over soybeans. It still exists, but it's not as stark as it was even just a couple of weeks ago. So I don't know. We'll see there, but yeah, I mean, that's a lot of acres. 96 million acres is a lot of acres of corn.
It is. It is. What about the soybean market? We've had a press the last couple of days. Is the market concerned again about China trade woes?
Yeah, absolutely. And also too, listen, 83 million acres of soybeans and a trend line yield. Things don't get, I mean, we're adequate, on there. If you don't get weather issues, it's hard to rally beans. And then you have that weather premium coming out a little bit just because the planting progress is going out. I think there was a real expectation that the United States would be farther along with China on their trade talks. I know I was. And then to hear some of the reports that have been coming out the past couple of weeks, it's hard to tell for sure, but if you're reading the tea leaves, it almost sounds like the United States wants to do deals with other countries other than China. My gut feeling, actually, one thing I'm concerned about is what if, tariffs keep on going higher against China and it turns into phase two of, the trade deals of, 4 years ago, and all of a sudden they throw IP into this whole thing. So I don't know. It just sounds like the United States is trying to make deals with all of their, largest buyers except China. China doesn't seem to want to buy anything from the United States. They're even saying they're going to try to cut down on meal usage over the next 5 years. And I just think there's a Cold War going on, and we're seeing the decoupling of China and the United States as much as possible. And it's a problem. It's definitely a problem for oil seed and protein demand. With basically China having to come to the United States.
Absolutely. Did we do any technical damage here in the soybeans because we've been really watching that 200-day moving average?
Yeah, so we're getting close. I mean, yeah, we are. We're still. When I take a look at soybeans, there's still hope. I actually pay a lot of attention to just that $10 mark. In my mind, $10 soybeans are like 860 soybeans of 2019, and that was really a holding line, for us for years. Soybeans used to trade between 860 and $11. And we did that from 2006, 2007 until 2019. Our new trading range for that is really the high nines, maybe $10 to about 12 or 13. And whether it be the 200-day moving average or that $10 marker, it is a big deal. I don't think all is lost. I mean, the market here is still it is still defending the lower end of those prices. But if we do break below $10, I think that's gonna be a real big problem for soybeans.
I got to ask you as well, soybean oil has had a big correction this week off the new contract highs. How much of that is weighed on the market?
Yeah, so right now used cooking oil is being tariffed about 145%, for Chinese cooking oil coming into the United States for renewable biodiesel production. It makes canola oil and soybean oil very competitive. And what we've seen here is soybean oil getting over to 50 cents a gallon. We saw canola on the board get to about $700 a ton. Both were annual highs, and contract highs in a lot of spots there. And what's showing us is that if this trade deal does not get done and these tariffs stay on Chinese used cooking oil coming to the United States, for the foreseeable future, um, there's, one of the bright spots at the moment has been that vegetable oil for renewables. So yeah, we had end of the month profit taking in both those markets, but canola is tight and the demand for soybean oil is strong. And even if we get a trade deal with China, you could make the argument, if they buy more beans from us, it should help the products, the meal and the oil go higher. And if they don't, and if the tariffs stay the same, bean oil and canola oil are still in demand here. So it seems like soybean oil is kind of the darling right now to be long.
Right. Do you think we'll get some of these other trade deals before we get anything done with China? There's a lot of talk here that we have struck a deal and maybe it's India.
Yeah, been hearing that too. India, I basically major Asian countries, right? And whether that be Japan or India or South Korea or whoever it may be, there are very large growing populations with, uh, top 10 GDP and economic growth in the world is what they're trying to do. I would love to see it. I think everyone would love to see a trade deal done with one of those major economies. I personally think we've got a Cold War going on between the United States and China, and it just makes this trade deal so much more difficult. And it's
Yeah.
probably in the United States' best interest to start doing deals with other countries. And it's probably in China's best interest to also do the same.
Right. So the dollar is below 100, but that market is really trading the geopolitical risk right now, isn't it?
Yeah. So basically, with the tariffs, it's going to hurt the dollar. I mean, if you think about it this way, if we're doing less business worldwide, there's less demand for dollars, right? So if I raise my tariffs 100% or 200%, it forces manufacturers to manufacture their products in the United States, and that's great for jobs. If there is a real rebalancing of trade, what it's not good for is the U.S. dollar because there's less demand for dollars because there's less international trade going on. So with the dollar coming down, that does help in theory. That it should help commodity prices here in the United States. It should help the demand for U.S. goods. But if there's reciprocal tariffs on U.S. goods, or there's a little bit of a trade war because of the tariffs the United States is placing on us, is placing on the rest of the world, that's not great yet. So I think in terms of the market, just in terms of the U.S. dollar here, the lower dollar is supportive. I think what everyone has to watch out for is if there are trade deals, does the U.S. dollar shoot back up and put some pressure back on corn and soybeans? And I know with the recent downward move, when I've been talking about it, some people have been kind of surprised to hear it because the market's already been falling. But if the dollar, dollar's down 8%, if we should shoot back up, you could see another. That's when the chart for soybeans could get ugly, right?
Thanks so much. That's Craig Turner with StoneX and Markets Now.